In this video, we're going to do something really special. I want you to focus on these 6 charts. We can see the DXY, the dollar-yen combo, the US 2-year, the US 10-year, the S&P 500 and Tesla. Behind all of these charts is a blue line. That blue line is Bitcoin. We're literally covering off everything. A lot of people think that Forex and currencies have nothing to do with the stock market, nothing to do with stocks, and nothing to do with crypto. Things couldn't be further from the truth, but it takes many decades to understand this. Have a look at this. As the DXY was coming up, the DXY, what was happening to Bitcoin? Oh, that's interesting. And when the DXY was coming down, what was happening to Bitcoin? Oh, that is interesting. Now, the yields have been exploding recently. What's been happening to crypto? Oh, okay, that's a bit intriguing. And does the stock market follow with the crypto market? Of course it does. A lot of people will tell you so many different stories. Please make sure that you look at the actual charts. In this video, I'm going to get you up to an institutional grade level of knowledge. After you've watched this video, things will literally never be the same again. Let's run the numbers. I'd like to share a quote with you. Never let a lack of knowledge stop you from acting wisely. It's a really important thing to keep in mind. A lot of people could look at an article like this, which was from the Wall Street Journal today. The end of Japan's negative rates will be a slow-moving tsunami. They could look at this article and say, that's got nothing to do with crypto, that's got nothing to do with stocks, that's something about Forex and yields and stuff I know nothing about. All markets are intercorrelated and interconnected. Just a quick heads up, Japan is the 3rd largest economy, and it's a very dominating force in the automotive and electrical industries. I'm going to take you through not the article, but the understanding behind the article. Japan has held negative interest rates for a very, very long time. In fact, 17 years. And Japan's stock market is rallying. It's going nuts currently. With Japan's stock market at record highs, the increase in interest rates by the Bank of Japan, or the BOJ as it's commonly known, is going to affect everything globally. One thing for you to note, that Japan is the single largest overseas holder of US treasuries. It currently holds $1.1 trillion worth of treasuries. What the BOJ is going to do very, very shortly could impact everything globally. From your mortgage costs to what the stock market and crypto does. Japan, since 2016, has had negative interest rates. What does that actually mean? It means if you had $1 million and you put it into the bank, you'd be paying the bank for their safekeeping of your money. That's a bit nutty, isn't it? So what would you do if you had $1.1 trillion just lying underneath the bed? You would say, I'm not giving it to the Bank of Japan. I'm not giving it to banks in Japan. I'm going to spend that somewhere else. I'm going to give it to, say the US. They've got fairly high interest rates. And that's exactly what the Japanese have been doing. In fact, 4.2 trillion US dollars is outside Japan because of the Japanese negative interest rates. This is very timely because the Fed, the FOMC meeting, is going to occur very shortly, and the US interest rate differential when compared to the Japanese market is narrowing. Now, if the Fed starts to cut rates, that differential between interest rates is going to go down and down and down until such a time that the Japanese interest rate could be larger than the US interest rate. Now, what do you think happens then to the $1.1 trillion in Treasury bonds, and not to mention the $4.2 trillion of Japanese money that's circulating the globe? You got it. It's likely to take wings and fly right back home. And it's also likely to force over time the US 10-year, the US 2-year up. Now, how do they do this? the FOMC would need to tighten monetary policy. Now, what happens when we tighten? When we tighten monetary policy, well, let's look at the other side. When we ease monetary policy, all the money printing gets put on and money flows into the stock market and to crypto and to everywhere else, into the real estate cycle. So, of course, it drives asset prices up. So when we tighten, we're doing the exact opposite of that. The Bank of Japan is expected to move slowly on this, but just be aware that tightening is not a good thing. Tightening is an eventuality behind the Bank of Japan's move. And we are talking globally. We are now looking at a structural reason why we could see increased yield activity increases over the 10-year and the 2-year. And you can already see that the dollar-yen combo is appreciating. We'll look at the structural levels in a minute. The DXY, you can see it's going up at the current time. Of course, when the 2 and the 10-year come up, that means that money is being attracted into the US economy. And how is it attracted in? You got it via the DXY. Different economies are always competing for capital flows. If the Bank of Japan does what it says it's going to do, and they're very honorable people, if they say they're going to do something, they're going to do it. So we would anticipate the dollar-yen combo to keep on ascending. And we're going to, like I said before, we're going to look into the structural levels. But it's good if you have an overview of what is occurring right now. With the yields coming up, this means it's more and more expensive to borrow. And we have better savings rates as well. So you can think about this as a mortgage and a borrowing rate on the US 10-year and a savings rate on the US 2. When we get the combination of the DXY, the US 2 and the US 10 all going up together, what do we expect from risk-on asset classes such as Bitcoin, such as the stock market? We expect them to retrace. This is normal, and we can see very much Tesla has been retracing. Now, we had something interesting occurring in the stock market. We'll look at that as well. We can see that the yen has been appreciating against the US dollar, and this is due to a lot of different reasons. That increasing rate differential is really important to understand. It's going to pull capital into Japan, and the unwinding of the carry trade is an important thing to understand as well. It's just a way that people can arbitrage foreign exchange. Let's zoom into this area and see what's underpinning dollar yen. We can see structurally when we pop on the indicator at 149.22, there's been an area of structural resistance, and that's played in to the dollar-yen combo. But of course, we would anticipate coming up at least through this positive fresh air gap up to the 150 mark. This is really big news. A lot of people would say, oh, Ken, it's priced in. I don't believe so. A lot of the carry trade will have to cover. It's like going short. They're going to be forced buyers. When you have the structural indicator on, you can see what is actually cooking inside the market. And this is a powerful thing to do. We know that from that 149.22 up to the 150 mark, we have a basic positive fresh air gap. Prices could move up really, really quickly in here. We also have a lot of underpinning structural support, and you can see these levels down here. That structural support is very important to dollar yen. But Ken, what does this mean practically? I'm investing in crypto. If dollar yen comes up, what does that mean? That means that the yields will come up. The DXY will come up as well. This is adding fuel to the fire. This could also see retracements inside the stock market and further retracements inside crypto. But I mentioned something interesting was happening here. Let's check that out. When looking at the S&P 500, we can see it's been a bit of a choppy road. It's been up and down, all over the place. Now, what the heck is this, and how do we explain it? The answer to that question is always the same. We just pop on the indicator. You don't need to be a masterclass student to take advantage of these indicators. It's a completely separate thing. Now, what do we notice here? As the S&P 500 hit a level of structural resistance just below 5180, it couldn't get above it. What did that mean? It was coming down to the structural level below, around that 5111 mark. Now, we saw it jump, but it didn't bypass this level of structural resistance. It's already backing away. This is very normal. This is exactly what we anticipate from structure. That's why you can get X-ray vision with the CTKS method, because it's the world's most powerful smart money buy and sell level detection system. We have such an incredible global family, and Art from yesterday said that we check out the Tier 1, Tier 2 and Tier 3 charts. Art also says, because I've been trading for a few decades successfully, but not to the degree of excellence that I am now, I am literally printing money, and it will only get better from here. And that's because Art is synchronized with the markets. By looking at the Tier 1, Tier 2 and Tier 3 charts, you're well on the way to a professional level of knowledge that you only see in top institutional investors and traders. Art was referring to the Tier 1, Tier 2 and Tier 3 charts here. The Tier 1 charts are vitally important. The Tier 2 and Tier 3 seek confirmation. We've been primarily focused on the US 10-year, the US 2-year, Bitcoin and the DXY, as well as the S&P 500, and we also threw Tesla in there. You can get all the trading view indicators for all of these charts by just popping across to ctksmethod.org. When we look at the direction of the S&P 500, we can see it's been coming up. Now, what is this blue line? That is Bitcoin. So that's the entire crypto market. What is Bitcoin doing relative to the S&P 500, aka the stock market? Well, they've been following each other. This is very normal, and unfortunately inside the crypto market there are a lot of people that do not have formal financial training, and therefore they can miss how all markets are intercorrelated and interconnected. If the stock market does come down, beware of what can happen to crypto. It's time to talk about the implications of what can happen to crypto and the stock market if yields continue to rise up, the DXY gains strength, and the Japanese yen starts to rally. The first question, are you prepared for a negative case scenario? If, for example, the yields continue to spike up, and you can see every time they spike heavily, it's a bit of a problem for crypto, for the crypto market, and indeed the stock market as well. What are you prepared to do? Do you have your three-dimensional risk management plan sorted out? Do you know what you'll do ahead of time? Or will you be like a deer in the headlights? If the markets go down, will you be this guy or this guy and say, oh no, I can't believe this is happening? Well, it's kind of on the cards at the moment. But the Bank of Japan, the interest rate increase will be slow to occur. So that's one thing that's going in our favor. But don't forget, the institutions profit first. You need to be not this one, or this one, or this one, and especially not this one when it comes to financial markets. Instead, you want to decide ahead of time what you're going to do when all the problems start flying at you, because when it comes to financial markets, there's lots of things that are just whipping around trying to take your profitability from you. Our strategy is to know what we will do if the price comes down, it goes flat, or it goes up. We hold 3 simultaneous strategies at all times. And we know that everything moves from structural level to structural level. We saw that with the S&P 500, and we see it with everything else. Just be aware that's how financial markets operate. Returning to our article, just pay attention to the words that are used here. The end of Japan's negative rates will be a slow-moving tsunami. A slow-moving tsunami, that's a good description of what is to come. And the author of this article is not incorrect at all. Long-term effects of positive Japanese rates could be profound on everything from mortgage rates to US government finances. In other words, it will increase them. The Fed and the FOMC meeting is happening very shortly, and it's expected that there will not be rate cuts. But with what the Bank of Japan is doing, it's likely that the US government, through the Fed, will have to keep rates higher for longer. Now, what is the implication of that, especially on the banking system? We would expect more pressure on the regional banks, especially as the Bank Term Funding Program has been stopped. Now, what is that going to do? That could cause a run on the banks and bank failures. We're getting more and more indications of banks not allowing any money to move into the crypto space. This is a global phenomenon, and it's occurring because the banks are terrified, because if they lose their deposits, they'll lose their stability. If that is the case, that unfortunate scenario of increasing rates or having rates higher for longer actually puts positive momentum inside the crypto industry, especially to Bitcoin. This is a time where we would expect, even though the rates could increase, and that is likely, to actually have positive momentum inside the crypto space because of a weakening financial system globally. But expect a lot of turbulence along the path. Things can go up and down quite significantly, and we are in a bull market inside of crypto. But the Bank of Japan's move from negative rates is really significant long term and structurally. As a global family, we're prepared and not scared. Many thanks to Crypto Monkey from yesterday's video. The comment was, the masterclass service and daily videos have prepared me so well for this bull run. We're incredibly grateful towards you too, my friend, and to everybody who watches and comments. It's just beautiful. In times of volatility, it's very important to know where the structural levels are because they'll act as safety nets and ceilings. Therefore, to know where those levels are, especially if we're going to get negative price momentum inside markets, is very, very important. You'll realize that things are not falling towards zero, they're falling towards a CTKS structural level, or as Jen likes to call it, the CTKS magic lines from the service. Thank you, my friend. From yesterday's video, also special thanks to TF Theta. TF Theta said it's X-ray vision of the market, and you can see how that's true. When we looked at the dollar-yen combo, we know there's positive air above it. It could move up really, really quickly. And TF Theta said, before knowing the CTKS method, I was confused and I could never really understand what was important to look at and how to interpret why there were moves in the charts going up and down and why. It's so incredibly valuable to understand when prices come down, they're coming down to a structural level, so we expect them to bounce. And if we have a major confluence of structural levels underneath price, we expect that to bounce price fairly sharply as well. When we have positive fresh air gaps and price is starting to get above, it could move very quickly up to the next structural level. The same goes with negative fresh air gaps where price is up here, but there's a big gap down. Price could collapse very significantly like this and need multiple safety nets for it to be caught. That's why it's incredibly important to know and get your X-ray vision of the market. Therefore, let's turn to Bitcoin. First, let's have a look at total crypto market cap. We can see the total crypto market cap has been under negative price momentum. But what is causing this? You got the answer. It's always the same answer. It's structure. So where is the structure? Let's pop on the indicator. Popping on the indicator, we can see that there was so much turbulence up here, so many structural resistance levels above that 2.54 up to the $2.58 trillion mark. Simply the crypto market couldn't get through it and was rejected down to a lower level of structural support. We've seen that we've been trying to get back above those areas, and we've found a degree of support at the $2.46 trillion mark. This is literally X-ray vision, and when you see negative fresh air gaps, that means the price can move down really, really quickly. But the opposite side of that, it can come back very quickly as well. I put Tesla onto the screen of those six because I want to show you how structural levels of one chart impact another. But let's turn first to Bitcoin. Turning to Bitcoin, we can see that Bitcoin has been under negative duress as well. It's been moving down, but we know why. That's the important thing. With the DXY rallying, the US 2 and the US 10 year, and now the pesky Bank of Japan coming off negative interest rates. Oh, how could they? That's thrown Bitcoin and crypto and the stock market under negative turbulence. But remember, price is always moving in a wave. Bitcoin is currently 67,606. Let's have a look at the structural indicator to figure out what's cooking inside Bitcoin's price chart. Also, it's good to remember that these structural lines change on a month-to-month basis because they're dynamic. These lines tell us an incredible story, and they're marking up in excess of 5,200 days. We can see through Bitcoin's price, it was struggling to get across that 73,500 mark. And when it finally broke down from this structural support level just a little bit below 71,900, where was it going? It was going back to areas of confluence. And because there's so many structural support levels, Bitcoin has bounced, and we would anticipate this occurring. The two levels to watch on your charts are this 71,900 level and down here the 64,210. If we break down underneath support and we can't get back up, that's going to push the price of Bitcoin down to 64,210. But if we start to rally, this 71,900 mark opens itself up. Remember, always hold a three-dimensional bias. When you see prices coming down like this, you can imagine if the edge of the price chart, this particular price area, was just here, so you couldn't see this price action. When this is occurring, everybody's saying, no, Bitcoin's going to 10,000, and then it goes right back up. You need to be aware of these structural levels and how they impact price. If you don't have your X-ray vision, if you do not know where the structural levels are, it's like flying blind or driving your car through the rear vision mirror as you're going forward. Not a pretty picture. When markets go red, understanding where the structural levels are is vitally important because you're not guessing. These structural levels are drawn up through the most statistically significant method that exists in technical analysis, the CTKS method, which has two levels of standard certification to do it. Turning to chart interdependencies, what we saw with the S&P 500, recently it came down to a level of structural support, and then what did it do? It bounced up to a level of structural resistance, and then backed off. The key to understand this is when the major indices bounce, they all tend to bounce together. If we get a bounce in the major indices, and in yesterday's video, Tesla was at this price, around that 163.50 mark. Now, where does Tesla's price go up to? Let's throw on structure and reveal why structure is a forward indicator of price. It is literally like having X-ray vision. Oh, look at this. Who could believe it? Of course, we believe it because this is how structure works. You can see that we bounced up very strongly and we've been stopped out at structure at around that 174 level. This is how powerful structure is. What would pretty much occur all the time is people see it going green and then say, oh, I got to get into Tesla. I've got to get into Tesla. And then it stops dead and they say, I have no reason on earth why Tesla stopped dead. It's because it encountered structural resistance. And you can see there are two levels of structural resistance just here. And it came through two levels. So this consolidation is not unexpected. If we start to get above 174, that opens up the 182 mark. Remember, the BOJ actions will take time to unwind inside the markets. Also, just bear in mind that we have structural support around that 168 area. So even if we come down, we would expect Tesla's price to be held. Of course, you could just look at price in pretty much the same way that everybody else looks at price and not know where the structural levels are, not know where the next resistance levels are, how strong the structure is, where it could come down to, the positive and the negative fresh air gaps. You could do all of that, but the market will mercilessly take your money. What is my conclusion? Will the Bank of Japan crash the market? No, it won't crash the market, but it is a slow-moving tsunami. Over time, the Bank of Japan's actions, increasing rates, the US government does not want to lose $1.1 trillion, and that's just in government bonds, and not to mention the $4.2 trillion overall. It is very likely to increase rates, so we're likely to see longer term an increase in the US 2 and the US 10, as well as the DXY. Those three like to hang out together. Now, what does it mean to the stock market and what does it mean to crypto? Expect incoming turbulence. Expect a really turbulent year as things go up and down and all over the place. You've already experienced what a little increase in rates can do to the market. Look at what it's done to Bitcoin. It's really just hammered it down, and it's done so with the stock market as well. Please make sure that you listen to people who have an institutional mindset and not a retail one. How do you know what the difference is? In a retail mindset, everything is emotionally charged. Lots of open mouths, lots of gasping and just horror and all sorts of things. That's very clickbaity, but the concept is retail is always losing money. Why? Because it's emotional by nature. The key to getting out of the retail mindset and into the institutional mindset is to understand as things are going green, that's more and more risk to the downside. You want to buy retracements or at least dollar cost average in on those retracements. If the Bank of Japan is increasing the rates, the US and Europe will be forced to follow suit. If the Bank of Japan is increasing rates, that will mean that the borrowing rates inside Japan will increase. That will be pushed through to the exports, so the cost of exports will increase as well. That will create cost push inflation on the rest of the world, and that will mean that rates will have to increase to push those costs down to make sure the consumers don't want to spend. That's why I'm saying over the next basically 12 months, the markets are going to get really choppy. They'll be ideal trading markets. I know personally that many people are going through life pullbacks at the moment. Please remember that you will progress twice what you are set back. Setbacks set you up for the next life rally. And always remember, life is what happens for you, not to you. If life is giving you a pullback, it's actually setting you up for a life rally. It's revealing your future to you. There's a reason that I use steps here, because you're literally going up steps as you go through life. Each time you walk up a step, that's like a pullback, because dang, that's hard to go up that step. That takes so much effort. And then you cruise for a while, and dang, that gets hard again. And you cruise for a while. This is the concept of life. You're always learning and growing. If you get set back, don't worry about it, because you can think that you are just going up a step. This is progress. This is stagnation. Or really, is it? This is the gaining of strength to go to the next step. Each time you look at a staircase or steps, just think about this concept. It's a really powerful one. I always think about this. Life can get really tough, and I know a lot of people are going through some real big hardships at the moment. Please know that our love and healing thoughts are with you. Your life will turn around again. You will rally. You're just being diverted to your ultimate focus. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.